Okay, welcome again. This is the last module of the Forex beginners course, and so far we have discussed how to identify key turning point, that is support and resistance, and the important candlesticks considerations, as the candlesticks formations you need to look at at some certain zones before you buy or sell. And we have also considered where to place a stop loss and a take profit so far, and also we have been able to learn about trends, how to identify an healthy trend, and how to know when a trend line is about to be broken. And also we discussed about the channel trading strategy. So this last module, we are just going to do a live example on the charts about all these things. We are going to identify support and resistance on the chart, and also look at the candlesticks and how they works on the live chart, and we are going to plot the trend lines on the live chart, and also look at the channel trading strategy, how it works on the live chart. So but before we jump into this, I want you to subscribe to this YouTube channel, A Plus Trading Up, and don't just subscribe, click on the notification bell there so you don't miss our next tutorial updates on the YouTube channel. You don't need to be missing the videos now. Just hit the notification bell, and anytime we update a new video, then you get notification. So let's jump in. First, let's see how we can identify the key turning point, that is support and resistance, on the live chart. So we start with which page should we use? Okay, let's see GBP Swiss francs. GBP Swiss francs. This is the TradingView trading platform. This platform is called TradingView. I prefer using the TradingView platform to do my analysis because it saves my analysis automatically. So all you need to do is just go to tradingview.com, then sign up, and you can use the platform too. It's free. You don't have to pay for anything. It's free. So this is GBP Swiss francs. We are on the weekly time frame, and we want to spot our support and resistance and see how they work. So we zoom out. Remember, I said I'm only interested in the key turning points, and the key turning points, you define them with using the higher time frames to trade. So I zoom out a little bit. So this is what we see. Okay, so I'm looking for a support and resistance. So you come over to this side, click here. This is where we have horizontal line, or you can also do alternate edge to plot your horizontal line. So click it, and I pick this point. This is a key turning point. When you draw, you need to adjust to fit. This is another point here, the key turning point too. You adjust to fit, and lastly pick this point, adjust to fit. And sometimes you don't need to do away with the extreme highs and extreme low. Like here we have this last turn point, this last swing low, so you have to accommodate. So right now we have a key turning point, and you can also see we have more than 3 touches on them. Like this one, we have 1 touch here, there's another one here, and this is a series of touch here, there's another one here, and over here this is a touch here, touch here, touch here, and this is another one. We had one here, and this is another turn. And this other way, the last, we have one here, this is another touch here, one, so you can see we have more than 3 touches. So these are my key turning level. I look out for price turning around from these zones. So right now, where is price at? Price is at this resistance here. Okay, it's now a support zone here, because remember we said when price breaks a resistance, closes above a resistance, and retests, it's a support level, so it's no more a resistance. So right now price is above this resistance level here, and we call this a zone. I said you don't look at your key turning point as price levels, rather we look at them on the zone. So we jump into the 4-hour time frame, the daily time frame rather, and we have to make this pointer zone. So you pick this tool, the rectangle tool, come here and pick the rectangle tool and do a little bit of a zone like this here. You can change the colors now. This is the zone. I mark this point well. At least your zone should be within a 50 to 100 pips range. So this is my zone here. So from what we are seeing now, price reached this support level and we can see a bullish engulfing candlestick there. There's a clear bullish engulfing candlestick. So that was a signal. So price is now above the next key level. So what we are looking for now is a retest of this key level. Then price continue going higher. So that is how you trade. So you wait for price to retest this zone. So when you see let's say hammer, bullish pin bar, or bullish engulfing candlestick formation from there, or any price rejections, you buy from here again and your take profit will be up here. So it's easy. So you can, for example, if you see this kind of setup on your chart, you can set a pending order at the one price level 1.2224. you set a buy limit there. Then your stop loss will be 50. Remember I said your stop loss should be at least 50 pips away from the signal candle. So this is what you use to calculate your risk to reward. Yeah. Is this, so your TP is at the next key level, which is here, which is at the 1.288 level. This level here, this is your take profit level, and this 1.2224 level is your entry, and your stop loss is at least away from that zone, which is a 1.2. So this is how you use the support and resistance. You know, it's very simple. Wait for price to approach a particular key level. When you see price rejections, that is when you buy or you sell. So this is a clear example of how you do that on the chart. You know, so right now all we are waiting for price to do, you want price to come back to this level, retest this level. When you see price rejections, bullish candlestick formations, you take a buy up to this point there. So that is how you trade. So let's look at on trend line how you identify the trend lines. So we see USD CAD, Canadian dollar. Alright, this is USD CAD. So we go. Remember, we like using the higher time frames. So as we can see here, we see a series of higher lows and higher highs. This is higher lows and higher highs, higher highs and higher lows. So since we have noticed this series of higher highs and higher lows, all we need to do is plot our trend lines. You come here, you see trend line, click on it, click and roll. We have spotted our trend. So this is an uptrend, and from what we are seeing here, price was trending higher. See, price was trending higher, and right now we have a breakdown. We saw a price breaking down the trend line. Remember, during the previous lesson we discussed how you can identify a change of trend. So right now price is about to change the trend. Price was moving on an uptrend, so right now we have seen a breakdown of the trend line. This is a breakdown of the trend line, and this is a retest of the trend line. Now that you have seen a breakdown and you see a retest, if you notice closely this level here, you see some bearish candlestick formation here, like price rejection. This is a gravestone doji, an inverted hammer, and right now we have seen bearish engulfing candlestick. So that is a signal that you should sell. So you can sell from there. You can sell from current market price now. This is the current market price, 1.32622. That is the current market price. You can sell from there. Then your take profit will be at this level, because this is the previous swing low, and your stop loss will be above here. Let me just do that at once using the order button. short position. So this is the current market price. Okay, let's do this at once. So your take profit will be at this level. Let's see if I have this level here. Okay, push it up. Alright, so this will be your take profit, and your stop loss will be few pips away from the signal candle, which is here. Okay, so you can see we have a good risk to reward there too. See, so this is your trade. So all you are looking for now, you are waiting for price to cancel from here, and your stop loss here. This will be your take profit price, then price push down. So in the price action course, I explained in depthly, and I will also train you how to fine tune your entries and your exits also on the lower time frame, not just on the higher time frame, and also on the lower time frame, so that you can reduce your risk and increase your rewards, your take profit, your profit rather. So that is how you use the trend line to take a trade, identify a broken trend line and what the price is doing, so you can make more money from it. So let's look at a channel trading strategy. Which page should we use? Let's see GBP AUD. GBP AUD. Okay. Alright, this is GBP AUD. We want to do channel trading strategy. So this is an uptrend already on the higher time frame, but let's use the daily. From what we are seeing here, the price is moving down, but we can do a channel trading with this. This is our first point, this is a second point, and this is a third point. So let's draw our trend line. You see, I'm including the wicks. I'm not cutting through the candlesticks. I make sure I include the wicks. The trend line is touching the wicks, so whenever you are plotting your trend line, make sure it includes the wicks, and we draw the resistance path of the trend line. So we include the candlestick wicks. So from what we are seeing here now, you see price touching here, commented that this is a rejection here, and here. So we can do channel trading with this. It is very clear. You see a series of touches on the trend line support and also on the trend line resistance. From here, this is a doji. We discussed this on the model 2 about pattern candlestick consideration, that anytime you see a doji, that means it's an indecision candlestick, that the buyers and sellers are the same in the market. So since we see a doji here, you don't just jump in and sell immediately. You have to wait for further price action. You need to see price rejections like this one here or this one here at that level before you can jump in or sell, or this kind of rejection here before you sell, like inverted hammer, bearish pin bar, or the bearish engulfing candle. So right now what you should do is you have to wait for maybe price to retest that trend line. Then when it retests that trend line and you see rejections, that is when you sell, and your take profit will be at this other end of the trend line. So that is how you do channel trading. Just spot these swings, then draw your trend line, watch out for price rejections at this trend line, then you take either a buy or sell. So right now on this chart, if you should see rejections from here and price trends down, once it reaches this other part of the trend line, take off your profit on the sell order, and you look out for rejections too, like this one's here, bullish rejections like this one here. And when you see it, you take a buy, place your stop loss at least 50 pips away from that signal candle, then your take profit will be up there like that. Your take profit will be here again. So that is how you do the channel trading strategy. It's very simple. You can do this in any financial market, be it forex and cryptos. You can do this over and over again. All you just need to do is open your chart, scan through it, look at for this swing highs and low, and you are good to go. So if you want to learn more about price action, click the link below these videos and you get to learn more about price action. Don't forget to subscribe to this channel, A Plus Trading Hub. So subscribe and click on the notification bell so you don't miss our next video updates on this channel. Then if this video was helpful, if this course was really helpful for you, if you learned a thing, even if it's one thing you learned from this ongoing course, I want you to like and comment what you learned on this video. Then if also you have more questions, also comment on this video. I'll look at it, then maybe give you more set examples towards your questions and explain further for you. So thank you for your time. Don't forget to subscribe. If you want to reach me directly, you can WhatsApp me at 0703 933 5695. Thank you.